Artemis Gold beat its second quarter forecasted earnings with its Blackwater Mine now in production. We're joined by Stephen Dean. He's the Executive Chair of Artemis Gold. Thanks for joining us today.
Thank you, Merella. Thanks for having me on the program again.
What has production been like so far at Blackwater? Has it met expectations?
Well, we're certainly well within our guidance that we issued upon achieving commercial production. As you may be aware, we only just commenced startup of operations earlier this year, and our commercial production commenced on May 1st. So it's still early days, but we're very pleased to say and report that we remain on track for production and costs.
Okay, I also know there's a plan that it could be expanded, a phase 2 expansion plan. When is the decision on that expected, and what would be the associated cost with that expansion?
Yeah, that's still under analysis. We did issue a study last year, in the first half of last year, which outlined an expansion of what we call our phase 2 step, which would take overall production throughput capacity to about 15 million tons, 15 million tons. But I think we plan to revisit that, and we're doing some analysis right now, and probably in late October, early November, we'll come out with the results of that work, and we'll optimize that phase 2 expansion to current conditions, including current gold price.
I was going to ask you about the current gold price. Obviously, the price of gold has done fairly well at the start of the year with all the uncertainty in the market. With the price as it is, have you had to change what you expect for the latter half of the year?
Our forecast cash flows look like they'll be stronger depending on what the gold price does for the remainder of the year, of course. But what it does do is generate more free cash flow, which will enable us to in turn fund and accelerate the phase 2 expansion over and above our original plans in 2024.
You also announced a credit deal of $700 million. So what is that money marked for?
Well, that's a transition from what we call a project loan facility, which is appropriate for development stage projects. And now that we're in cash flow and generating profits and earnings, this is a facility that is more akin to an operating company. So it's a revolving cash facility up to 700 million Canadian. And that will refinance the remainder of our project loan facility, as well as give us some flexibility on funding our expansion.
Okay. What's it been like working in BC? I know you have Indigenous partners on this as well.
Well, we're very grateful for the support we have from our Indigenous partners. We have 6 partnerships for the Indigenous nations whose traditional territories either the mine sits on or the associated infrastructure of the mine is connected to. We enjoy their support. We're grateful for their support. It's a privilege to work on their lands. We also enjoy the support of the greater community in and around Prince George and Vanderhoof in the Caribou district here in BC. There's been a downturn in the forestry industry, and we're creating new jobs in that region for the greater community.
The input from the Indigenous communities, has that resulted in a pivot one way or another in your plans or in your strategy?
No, we've been working for a very long time, including the predecessor company that did own the project since 2012, in fact, with those nations, and the mode of operation, the environmental protection measures, the jobs, the benefits, etc., have been developed over that period, as I said, almost 12 or 13 years. And so that's what facilitated us getting to construction and now commissioning of our operations earlier this year. So we're now rolling out the benefits, both financial and non-financial, under those agreements.
What would you say, Stephen, would be the biggest challenge moving forward? You mentioned going from sort of construction and development now to producing. What is the biggest headwind the company faces?
Yeah, I think we're in a rather unique position in that, the typical headwind for most companies, in fact, most businesses around the world these days, is labor labor force and getting trained workers. We're fairly fortunate, as I mentioned earlier, that we have within close proximity to the mine communities where there's been some unemployment as a result of the downturn in the forestry and other sectors. So we're able to absorb that skilled labor force, and so we're pretty fortunate in that respect. But, one of the things that the Artemis Gold team has done particularly well, in my opinion, and I'm very proud of our team in this respect, and that is execution. It is very difficult to build new mines anywhere in the world today. And there are cost pressures, there's schedule pressures, and other challenges, and we managed to overcome those wildfires in the case of our operation in the last 2 years here in BC, and deliver the project when we said we would, and on time and on budget within those constraints. And so the next stage of expansion for us is a similar risk and a similar challenge, in that we need to execute well, as we have done on phase one.
A lot of companies are trying to figure out now how to use AI for their system to be either more efficient or to determine their strategy moving forward. Have you had a chance to employ AI yet for Artemis?
The industry has the benefit of computing technology and has applied those, whether it be in resource estimation, whether it be metallurgical processing, using high technology to determine assays on mineralization, metallurgical processes, mining, GPS, automation of equipment, haulage fleet, digging fleet, etc. And even in construction, we were having a conversation in recent days whereby we can optimize construction schedules over and above what humans can, and we're deploying those sorts of technologies and intelligence in our business today.
Stephen Dean, I've got to leave it there, sir, but thanks for your time. Stephen's the Executive Chair of Artemis Gold.